China's economic recovery from the pandemic continues, but at a slower pace compared with the beginning of the year. The first half of 2021 saw the world's second biggest economy expand overall by 12.7%. But there was an expected slowdown in the pace of growth in the second quarter. GDP grew at 18.3% year-on-year from January to March, and that was largely due to a low starting point as China's economy took a hit at the beginning of the pandemic in early 2020. The second quarter saw GDP growth drop to 7.9%. Then let's take a look at foreign trade. For the first half of 2021, imports and exports increased more than 27% compared to a year earlier, buoyed by an increase in global commodity prices. That's despite shipping disruption caused by regional virus outbreaks. Now, an interesting trend to look at here, global holdings of Chinese stocks and bonds have surged about 40% to more than $800 billion over the last year. That's a record pace for global investors buying up Chinese assets. Well, Sue Ewers from the Economics Intelligence Unit, I asked her if the second quarter results mean China's economic recovery is slowing down.
The difference is actually because of the low base effect last year when China's economy is being hit by the COVID-19. So the indicators that we are looking at is the two-year average growth. So in Q2, if we look at the two-year average growth compared with Q2 in 2019, you will find the growth rate is around 5.5%, very close to the trend growth before the pandemic, suggesting the economy is running relatively well.
What action do you expect China to take to try and encourage domestic consumption? Because I noticed Prime Minister Premier Li has warned against what he described as flood-like stimulus. And that's the temptation here, isn't it? You turn the taps on and that will kind of fix it. It may not.
In the second half of this year, Chinese government will implement very targeted policy to stimulate domestic consumption. So one consideration might be providing subsidies to encourage households to purchase new environmental friendly house appliances. This is one way to boost retail sales of consumer goods. And the second thing that Chinese government might consider is to encourage tourism visit, because the people still cannot travel abroad. And the third thing I think is definitely going to happen is the tightening regulation on house speculation will still exist, so that people don't need to borrow much money to purchase house and spend the money, and instead spend the money on consumption.
Foreign trade seems to be performing relatively well despite this extraordinary global semiconductor shortage, the chip shortage, and the possibility of this resurging pandemic threat around the world.
Foreign trade has actually performed very well, despite that in many countries that we're seeing the third and fourth waves of the COVID-19. But actually, China actually benefit from the economic lockdown elsewhere in the world is because the lockdown actually generate demand for electronic products and house furnitures, which all boost China's exports. Car export also increased because people want to avoid traveling via public vehicles. Once the COVID-19 continues to recover at the rest of the world, China's export will be able to maintain such momentum because of genuine recovery of global economy that will definitely boost China's export demand. So we still believe that in the second half of this year, current account surplus will continue to contribute positively to China's GDP.